Hey man, it's your boy Montego Ramon, man. Back with another video with the Risers X channel where we rise to the occasion. Alright man, look, it is Sunday, the charts are open, and it's been open since 5 p.m. today Central Time. What is going on right now? Right now, man, as you can see, we just gonna hop right into it. I'm gonna hop on the S&P right here. Because my alerts went off, as y'all can see from my last video. What the hell? Oh, all right, so we're gonna hop right into there and just see what the hell is going on. All right, so as y'all can see, we done gapped up, right? We done gapped up. You can see my projections I had right here. This is the area of interest. I was looking for a trade to basically dip into this gap, right? Dip into this gap. You get a rejection out of here. We start building some structure upward, you know what I'm saying? And going right into this level of resistance above here, right? So that's kind of what we're expecting. Basically, so we are, let's check the 4 hour out. Yeah, we've come up to this level. Seems like we're kind of holding this level a little bit. There is a 4 hour fair value gap right here. There's a 4 hour fair value gap right here. We could probably get a possible rejection from before we dip back into the gap. Now the gap here, you can see, this is one thing I've always been wanting to check out and learn a little more about. So we see the 1 hour gap. I'm gonna go to the 1 hour. I'm gonna draw the gap, right? I see the 1 hour gap, right? Boom. This was basically that, and then I'll draw it up to the low of the first close of the low of the last opening candle, right? So that's the gap here. Now let's go down to like the 15 minute. I want to see what the gap looking like. So the gap on the 15 minute looks like that. I really don't want to go no lower than the 15 minute because y'all know I'm typically trading from this higher time frame from now on. Boom. So that's probably a little more accurate, right? Y'all know last gap up, we got something similar. We had something similar going on where price, this actually dipped into the fair value gap, and then right here, it actually dipped back into it and then started creating structure going upward. Seems like we're getting a slow trend up. Nonetheless, it's a trend up, and it looks like we're starting, you know, last time what we did was we waited until we got some structure, a shift of structure, and specifically downtrending structure on price, basically showing that it wanted to start to make its way back into this gap, right? That's what that would potentially look like, right? You see lower highs and lower lows leading down into the gap. But we want to wait until we start to really see that. And we also want to see fair value gaps creating entries along with that structure before we try to hop into this trade for price to come fill this gap here and on the balance. This is all based on the philosophy of price likes to take out stops on the buy side or sell side liquidity, and then it also likes to create imbalances and then go and rebalance, right? So a lot of times these imbalances come from institutional capital being sent, you know, basically sent into the market, right? Because retail traders don't have enough capital and power to create these type of huge capital movements like that, but the institutions do, right? And so this is where we know the whales have probably entered the game here. And so what's so crazy is this rejection right here at the top of this gap, which is like a no trade area, I believe I had created. Well, why did that just do that? All right, bet. And so basically, like I said, in this instance, we could try to take a trade to fill the fair value gap. It would be something closer to a day trade, swing trade, scalp type of trade, versus the long-term move we were looking for was this pullback into this gap, and then we start to create a trend, that structure trending up into these last highs and so on and so forth, you know. So we have these, look, we have gaps right here, right? I got a fair value gap here, that's also at a level of resistance. And then we have all-time highs up here where this double top was created. And man, if you would have got that sell, caught that sell all the way down to here, man, you'd have been the goddamn man. It took how many days for it to get down there to that major low? That's like the lowest we went to. That didn't take no time. Hold on, man. Let's see, how many days was that? So we touched this high. You gave you another opportunity to kind of get back in there. And once it got back to that level, we seen that sell off. That's just 1, 2, 3, 4, 5, 6, 7, 8 days. Basically 7 days. 7, almost 8 days for it to find that major low. It sold off. So to go from 7,700 basically down to 73, we'll just say roughly say 7,300, to do that, we'd have to, it basically had to sell off, is that 400 points? That's about 400 points roughly. So 400 points is only about, that's heavy. Because if we just roughly say, like, let's say 70 points is a 1% move, right? So if 77 points is a 1%, 70 points would be a, am I tripping? Would be a 1% move. So if you take 400 divided by 70, that's roughly 5 to 6% in a single day. That's tough. That's a huge move, because on average, S&P ain't moving that much in a day. Now, don't get me wrong, you can catch massive moves and get a lot of points, because that's, now it's starting to understand the tick counts along with the points, right? So on NQ, I know that, because I don't know the point ticks for this. So on NQ, I understand that a tick is worth 20 points on a single contract, a mini contract. So that means 1 point is basically an $80 move for a single contract, right? Now let's see what it is for the S&P. So let's say tick count, I think it should have been TICK, tick count for S&P 500 futures. I'm gonna say futures mini. Now I did not do that correctly as far as the tick count for S&P 500 futures mini. Let's see, 4 ticks, $0.25, $1.20, $12.50 per tick, and it's 0.25s per point. So there you go. So it's a little cheaper than the NQ, which is $12.50 per tick. So that means that 1 point is basically $40. Am I tripping? Or $50? $50, sorry, $50. Yeah, it says it right here, $50. I was doing the math in my head. Okay, that's cool. That's good to know. Okay, cool. Yeah. So that's good to know, right? So according to the higher time frame, this square I had here was just a no trade zone I was trying to see about, basically. Let's see, on the 4 hour, is it an area? I feel like it's been moved though. Whatever, I'm not concerned with it. So yeah, like I was saying, so that lets you know that, like, if it's moving on average, let's say, like, let's check out this move right here. From 350 to the end of this day, that was 150 points. If you caught 150 points times $50 a point, that would be, let's do the math. $50 times 150, $7,500. It's a nice move. You made $7,500 in 24 hours or less. Actually, it's less than that. It's from 4 a.m. to 12 hours, basically, 4 p.m. That's really cool. That's a nice payday for anybody. Especially when you just pressed the button and you just watched, or didn't even watch, you walked away. So yeah, basically, like I said, for here, it's S&P 500. For the S&P 500, we've gapped up. We're starting to work our way up. We're looking for a potential. We could take a potential counter trend trade to fill this gap, but the overall trade I'm looking for is a fill here at this fair value gap, and then a continuation upward into the new highs. This is what I'm hoping for. So we shall see. Now let's go to NQ. NQ, as you can see, let's go to the 4 hour. The gap doesn't even show here, but I think a lot of times the gap show is when you have price doing this, when the bodies don't touch, I believe this is also considered a price gap or indication of a price gap on the lower time frame, right? So let's go down to the 1 hour. Kaboom, we have a price gap. And what I will do is draw a larger square to represent that gap. And we've already filled the gap here according to the price chart on the 1 hour for, this is GC. We're supposed to be on NQ, man. Thank you. What is going on? Why is this big old thing here? Oh, that was a trade idea we're waiting on. All right, get this out the way, man. All right, so like I said, let's go to the 4 hour. Maybe I should have just finished on gold. Let's just finish on gold. I'll just finish on gold. So gold, we seem to have a price gap up as well. Oh, we also filled this fair value gap on the 4 hour. We also filled this fair value gap on the 4 hour. Wasted no time doing that. And then we also have, we're a little zoomed in too. We also have a price gap here. I mean, a fair value gap, not a price gap. Boom. So price could potentially come into that. Our next areas of like support and resistance would be basically, I'll kind of give a rough zone here, right? I'll give a rough zone here, and then I'll give a rough zone at the higher level. We have one here roughly, right, where these wicks are at. And then the next level would be right here in the 4230s, basically 4220s, right, 4200s to 4220s, as the next levels price will go to. So what I'll do is I want to set a alert here. I want to set an alert here, and I also want to set an alert inside this fair value gap. Boom. Now let's go back to the S&P 500 because I didn't set my parameters on there. So what I want to see is, I want to go to the 1 hour on this. I want to see price start to make its way down into here. So I'll add an alert. And then, is there any place I want to put an alert? Oh yeah, once we start to get into this gap, add alert. Is there anything else I want to watch out for? No, that is all. Let's go back to gold. So I just set my alerts on there. My alerts actually went off today too on YM and ES, which we'll touch on YM as well. And this is actually more of the style I want to get into, where we're just tracking the areas of interest between the 4 different indices the three different indices and gold. And then I just want to mark out the areas where the obvious opportunities lie at, right? So this probably would have been a nice sell potentially from this area of resistance. We're making our way up right now after we've rejected out of here. I'm curious to see what gold is going to do, because as you can see, bro, we just okay, let's just track it from this low. From this low, we made a higher high because it's higher than this major high. Broke these highs, broke this high, and then we had an immediately pull back. We made a lower low. We made a higher low here because it's higher than this low, and then we immediately basically made a higher high. So overall, we were in the uptrending structure right there, and then we ended up selling off dipping into this fair value gap, right? Boom, there's a fair value gap there. You know, it's a 3 candle move. You have 1, 2, 3. You see candle 1 here is not touching or have any overlap with candle 3, right? So it's just a body sitting here at candle 2 in the middle. And when you see no overlap, you would take the high of the first candle and the low of the third candle, and that's where the gap lies. So I just taught you fair value gaps like that, right? That's an idea of a fair value gap, and those are potential areas of entries, because price typically you get rejections, and sometimes it goes right through, but it's people have based strategies off this idea, right? So this is what we're doing so far. We seem like we're making higher highs and higher lows after this pullback, and could potentially be heading up here, probably get another rejection, probably have a fair value gap created in this instance, and then it shoots up. Now, what I can do is use the ghost feed, and then we'll start to create that. Boom, you got that made, you got that. We gapped up, we came back and filled the price gap. Boom. What the hell happened to the... Okay, cool. I guess I gotta grab it again. Good. All right. We shot up from here. Boom. Bro, what the hell is going on with the... Does the ghost feed only work like... And so over here, we could potentially be coming up to here, right? Like I said, we might get a rejection. Oh snap, now it's working. We might get a rejection down into this area maybe, right? Before we continue up. So is it only allows me 3 points on this, right? So then we might get we might start to get this move up into here, right? Probably another rejection, turning this lever of resistance, now turn support on this end, and then start to work our way up potentially. Also too, this probably is a good move because they're talking about the rates were unmoved, but people are expecting a rise, a 25 point basis rise in rates in September. So that's going to be interesting. September and August, especially September, is like usually one of the worst months in the market. Lately, the last couple of years, it's been like April, March has been one of the worst months in the market. And also one of the best months as far as recovery, but typically prices like selling off, you get a lot of volatility. Selling off and then it's shooting back up, you know what I mean? Typically we sell off in September. Not mad at that. Market just cooling off. Reports are companies are reporting. I think companies are reporting this coming week, so I don't think they report in September, but it's usually a lot of adjustment going on, going on to the holidays, the movement, market cycle, season, things like that. And then the winter run is going to be crazy. They call it the holiday run. They also call it the Santa Claus run. That's going to be pretty crazy to see. Market usually just running crazy during this time at the end of the year. So that's what I'm looking at on gold. We just want to kind of continue to track this structure. I have my alert set. Is there any other places I would like to see alert set? No, I have the area which I'm looking for the rejection, which is on the 4 hour. Can I see anything on the 30-minute rejecting from there? Not really. Feel that. We could potentially sell off because overall we're in an overall trend, and there are gaps down here on our 30-minute. Let's see our 15-minute. Is there gaps below here? Not really. It's filled. There's a gap here, right? There's a gap here I will watch for, and I will set a target for. Add an alert. Boom. So I just want to see what type of structure we just continue to create. This looks like a shift of structure here, right? So I'll draw what that looks like. Let me get this out the way. This looks like a ship to structure though, guys. Let me show you what I mean. If you don't know, I've talked about it before. Super important to know and understand. So we came from this high. We had these 3 even highs rejecting from this zone. We come starting to fill this gap, but then we still make a lower high, and now we're breaking below this level, these 3 rejections right here of support from these highs, which we had those rejections, and that's already the start of the shift to structure. I mean, from this uptrend right here, and now we're downtrending on this end. Boom, right? You're getting lower lows, lower highs. We come to a major low, fully mitigate a fair value gap. We get a rejection, making a lower high, but then we make a higher low. Super important to understand, right? We get a higher high, which is higher than this high, right? Which is why the higher high, and then we get a higher low here because it's lower than this high, right? And then we got this rejection up. We got this price gap up today, right? We get a little bit of structure coming down just to really continue structure, making a higher low because it's higher than this major low, and then we're basically rejecting all that, making a lower high because it's lower than this high, and then we have a higher low here, and I'm expecting us to continue up, like I said, into this area, which is a 4-hour fair value gap, a potential rejection right here, as we pull back to continue up into this area potentially. We shall see though, because overall, like I told you guys, we're in a major downtrend from major highs. Like overall, that trend is looking like this, my guys. Look, let me see if I can pull back even more, because that trend is something crazy. That downtrend is something crazy. But hold up. Let me show y'all that downtrend. I'll just start from this high, which is one of the major highs, around 5,000. Boom, we had this here, here, here. You got those touches all across the board for the most part. As far as like this thing goes, it slightly started to speed up its trajectory down, but then we're starting to sort of round off and get kind of parabolic for us to turn around that corner and end up coming back to new highs. I think we'll go past 5,000 this year. We just got to be on the lookout, because last time what happened, like, look at this damn trend, guys. Like, we was up to 5,250. Boy, hold up. This shit went crazy. Like, look at that trend. That's a huge damn trend. Let me get this out of there. Let me get this out of there. Right, huge downtrend, crazy. I'll draw a line. I'll draw the downtrend line again. From this high connected. All right, just connecting those highs. That thing was speeding downwards. You know what I'm saying? And then now we're at this level where it's like, are we getting a shift to structure? Where did we originally take off from? We took off from down here, guys. This level, which I had marked off, which is resistance over here before we flipped it and started shooting up, and we could really honestly turn back to this level of support now. And then I'm definitely buying from this level. So let me just set an alert. If we get down to here, boy, I'm buying. Add an alert. I'm gonna just set a buy down here too. We're gonna buy one. It's just gonna stay down there. What the hell was that? All right, cool. So it's in there. I'm gonna just leave that there. I'll be real with y'all. I actually might do the same thing for a long dated option call or something like that, and I'll just rock with gold to the moon with that thing, man. I ain't gonna lie to y'all, dog. Let me see what the daily looking like. Same, bruh. It's pretty much the same. Like the level of resistance was here. I could slide this up actually a little bit. It's there though, man. And then we taking this thing to the moon. Next time we get a pullback like that. The war is still hot right now. Trump saying one thing, Iran saying another. They ready to go to war. And Trump like, we're counseling the strike, the attack. They're gonna come to an agreement, I'm sure. They're like, nah, he delusional. They saying, nah, he delusional, guys. This is my sources are saying, y'all. Look, man, I dropped the link in the chat for the other guys, bro. Like, there's some sources that I listen to and watch, and you can just go look up like what he's saying and then what Iran is saying, like what they're reporting, and it's like this is funny, bro. But yeah, so let's go to NQ and make sure I got my alert set. We getting a bounce out of a major support level, I think, just to continue down, if I'm being honest, because it looks like just hell waiting down here. I ain't gonna lie, because the major level of resistance or resistance on this side is here, that will turn the support over here for us to do the bounce. And what's happening is, what you can tell is that the range on the highs and the lows are expanding, right? Which I'll do that on a daily. Let's see what like on the 4 hour. Cause like, let's do it like this. I'll show you what I mean by that. So if you see this run, look at this, from this low to this high, boom. That is hella points. How many points is that? 23,000 to 31,000. And then that was in March 2026. From here to here, I'm gonna just clone this. Clone. Dang. We dipped 17,000 and then we ran up to 27,000, 10 points. I'm just saying, before we saw a major pullback, right? And so that's what I mean by the range is kind of expanding, right? But actually this one is smaller than this one. This is a crazy run. This, which, like I said, from here to here, 23,000 to 31,000, only 8,000 points. This is a 10,000 point move from here to 27,000 basically. So you can kind of see that thing just continue, but we come a very long way. The range is actually pretty crazy, honestly, on these lows and these highs. This was a serious economic event for COVID. That was a crazy drop off, and that run after is insane. That is a run from 10,000 to 20,000. What? That's a 10,000 point move though. That's not, oh, that's not even crazy. Okay, so 10,000, 8,000 points is pretty normal, right? After a serious decline, which, what do the declines look like? Like this decline right here was like 23,000 down to 17,000. That's only about 6,000 point drop. This one right here, 26,000 down to 22,000, 30,000 point drop. This decline over here was from 13,000 down to 10,000 point drop, but then we ran for another 10 points. It's like tripling what it's dropping every time. Like, you catching that dip is significant when you think about 13 down to 10, 9, down 13,000 down 10,000, that's 3. That is huge. That is, how big of a decline is that from 13? You lose, that's like a 25% drop almost. Guys, that is crazy. That's like it's around 27. That's bear territory type stuff, bro. And typically we get a drop like that, we running. This joint running. This joint running, man. If you could have caught this around 13 and held to, when was this? 13. This is in 2022. If you would have held till 25 February, bro, you up some dumb crazy. Man, you made hella money, bro. If I catch another decline, bro, I'm buying a contract out so damn far. All right, let's get back into it. I done got off track and stuff, man. I don't want this video to be too long. All right, so like I said, I came in here. I need to see, I'm going to mark this area right here immediately for this fair value gap underneath here on my 4 hour. So let me draw that fair value gap I'm seeing right there. I'll walk out through where the fair value gap is one more time. Boom. I want to draw this out here. Boom. So you see this first candle. I'll zoom in. It's a 3 candle move. You see candle 1 right here, this small black candle. You see candle 2, this big huge black candle, and then you see candle 3, this small black candle. When you look at candle 3, you see the wick. You see that little wick right there, that black line. The body is the black square, and then the lines are the wick. You got the upper wick and the lower wick, right? And then you see the lower wick, it stops about right here, right? So this is like basically the top of the fair value gap. Here's the bottom of the fair value gap at the high of the at the end point of the upper wick on the first candle, right? And then what's up in between is the area where first candle and the last candle have no interlapping in previous price touches, right? So what's left there is this basic area where price moved basically without any overlaps from the previous or succeeding candles, right? So that leaves this fair value gap, right? Fair value gaps is basically an indication of institutional capital being injected into the market, right? And so it creates these imbalances. That's an imbalance where price didn't come back and you have overlaps from previous candles or previous time frames, basically, where price was moving or price action was moving, right? So that's where we drew that fair value gap, and I got an alert at the top of it to try to catch that, right? And then the next spot I want to look for is I want to see a break above. I want to see a break into this level, add an alert, and I want to see a break into the top of this fair value gap. So I add one at this level, add, and then oh damn. Okay, cool, whatever. I'll reach my limit on price. So what I'll do is I'll move this one. I don't really need to know that one. I want to know that one, and then that one. That's good. Okay, cool. And I got a couple more if I could use them. All right, this is the top. I want to see the top of this fair value gap here, and then I'll remove this one. I don't need to see this one. Boom. I don't need to see this one, not as of right now. Cool. I don't even need this one for real. Delete. All right, cool. So that just gave me a few more alerts to be able to use, and you can see we have the original rejection from this fair value gap on this white candle, right? We had a rejection. You can see price came up into there. Boom, this candle makes it about this high before being pushed back down right into another fair value gap where it's rejecting from. On the opening today, price gapped up. We should expect a price gap fill. So let's go down to like the 1 hour. I want to see price. So price, we're already getting a rejection from this previous level where we had rejected from. So let's go down to the 15-minute. Okay, cool. So I'm already starting to get downtrending structure, and that means that we could potentially start to work our way into this area, which I'm going to draw a loop, add an alert, and then this could be a trade right here. We seem to be rejecting. I don't really see no super nice entries as far as like, did I see a fair value gap fill for an entry or anything like that? I bet if I go down here, I'll probably have some if I go down to the smaller time frame. So if we go down to the 2 minute, you can see these fair value gaps that was created here. Price fill, starting to create that downtrending structure. This is the same thing it did last week, guys. If y'all was watching me last week, if y'all watched price last week, you don't want to hop in expecting an immediate fill on the price gap. What you want to watch for is price to probably shoot up and then really start to get a shift of structure or some rejections from a major area on the higher time frame, and then look in the lower time frames for the shift in the for a shift in the structure. Right, the shift in structure is something as simple as you see higher highs being made, and then now you start to see a shift in the structure where you start to see maybe a low being made, and then now a lower high, and then a lower low and a lower high, you know what I mean? So it goes from uptrend to downtrend or something, you know what I'm saying? Or downtrend to uptrend, you know what I mean? So that's just what you want to watch out for. So we know we moving towards high, so with the shifting structure, we're probably going to be a downtrend, right? So we're starting to get some price action created. Oh, we actually had a fair value gap fill here. That's a good one. This one was down here, but price shot up as much as here, then inverted this fair value gap, and then created one coming down, and then price pulled right back into here. You got this little fill here. I would draw a box there just to show you guys. Boom, if you didn't see it, boom. You see that black wick on that candle touching inside there, immediately rejecting, come back down, and come right back to that same area pretty much, and then it continues down. And we're inside of this fair value gap right here, which we're probably going to invert and potentially create another fair value gap while we're inverting this one. And then hopefully this is another indication of a continuation down and to fill this fair value, this price gap, because this is not a fair value gap, this is a price gap. Price gap is not the same as the fair value gap, guys. You can actually just Google and look them up. Put that back, bro. What are you doing? What is he doing? All right. And all I want to do is track price to the major areas and levels where I want to take my trades from. And I told y'all we're working on taking trades from higher time frames, such as 4 hour and 1 hour, right? Because we want to cut all the noise in between and trade from major levels and create a more passive way of trading, right? Where we're not having to sit here and watch, but we're able to find a solid area where a price is going to give me a good move. You know what I'm saying? Like this right here. This is on the 5 minute, but we got this. Let me see if I can find just an example of a nice trade. I like this right here. I like this right here. Because number one, we came down into this major area, which is, if you look way left, this is a major area of resistance, and there's also a fair value gap below here, right? I mean, major area of support, because you can see we shot up above here, pulled down into this area, and then shot up from there. Let me draw for you so you can see well. Boom. So we came up above this level. Watch as we come up. We came above this level. We pulled down back into this level and immediately rejected out of there. So we broke above this level of resistance and then turned into a level of support. And then what did price do? We went dummy. Are y'all not seeing that? We went dummy. We went for the sky on that one, right? Bro, stop, bro. All right. And then what happened on this side, guys? This is why you look left, man. When you doing what you doing, bro, you need to validate. We came down here, rejected, creating this shifter structure. Boom. You know what I'm saying? Like, we're going nuts, man. We're going nuts. So what can we possibly expect? Price to go higher from this level. We could potentially go down, still in a major trend, but for the most part, that would have been a nice trade to catch right here. Watch this, guys. We just would have took that level just because we look based on what happened left. We seen that. We used the fair value gap entry. Boom. I want my stops below this last low. And then I just want to target at least this area where price had one before, or I can target this gap right here, this fair value gap, right? 6 to 1, 1 to 6. That's $100 being turned into $600. That's $200 being turned into $1,200. That's $300 being turned to $800, $1,800. That's what's that? That's $800 being turned into $4,800. You know what I'm saying? You want a 10K day, that's gonna be you maybe you risk 2K, 1.5K to make 9.5, or 1.5K to make, you know, 2K to make 12,000. You know what I mean? Like, let's go crazy. Yo, I'm gonna cut y'all right here. Actually, let's go to EAYM real quick before I cut it. We're pretty much looking for the same thing. And I'll just keep this one short and straight to the point. I love the way this price action is looking. It's actually looking really smooth right now. Be real with y'all. It's looking really smooth. My alerts were absolutely hit, I think. I will cut those. Yeah, my alerts went off today, guys. As soon as it's like right after, not too long, like an hour after price had opened up or whatever, my stuff was going off. So as y'all can see, just being on the 1 hour, we have this price gap here. Boom. We're starting to get a rejection from this right here, from this fair value gap on the 1 hour. Right, we're starting to get a rejection. Boom. We should start to dip back into there. We have some room here for a price, for a fair value gap fill. Very small room. Nonetheless, there is some room there. Cool. Overall, we were in a slight downtrend and could be creating a shifter structure here. Nope. We're mostly kind of look like we're kind of consolidating, but also I would not want to trade this right here. This is a major area of resistance right here. As y'all can see, all these wicks and rejections from this level. Watch for this level right here, where prices create this fair value gap after touching all-time highs. Is this an all-time high or what? That is absolutely an all-time high. You see nothing even within this is a crazy, go crazy, crazy run. Yeah, so where the red line is a major level of resistance. This is a gap. This is where all-time highs lie. I will also clone this for all-time highs. All right, boom. And then where do I want to find? I want to mark out the area, an area of support as well. Boom. This would be an area of support. Potentially, I'll use all of these. We can use all of these, matter of fact. Boom. So I want to set a alert there. I want to set an alert inside up to here. Add an alert, and then I want to see an alert on this price gap field. Add an alert, and I want to see an alert here. All right, cool. So we got our alert set for here, because I would love to take something like this. I would love to see a trade like this along from here, potentially. Probably the all-time highs. I'd be willing to take a long from here. I just want to clone this. I'll be willing to take a long from here, like inside this price gap right here. If I gotta do a wider stop, I wouldn't mind. And let's say I wanted to keep a shorter trade or something. Maybe I wanted to go into this level, or you know what I'm saying? Or even here, I might want to just go into this level. You know, maybe not trying to break the all-time highs. But honestly, we had a potential to find a nice bottom in the near future, next month or two, and then really take this thing to some new all-time highs as we go into the holidays and stuff like that, man. I am feeling super satisfied right now, bro. We went through this work and have our levels marked off, bro, because this is going to really prepare us for the week, and finding some nice trades and being clear on the opportunities and tracking price and things like that. So, man, this is your boy Montego Ramon. Y'all know what I'm on, man. That's all I got for y'all today, bro. This is probably one of my longest videos ever, probably. I think I have one other longer one, maybe, where I was teaching how to read anatomy of a candlesticks. I'll try to post that somewhere around here so you can learn how to read the candlesticks, okay? And y'all have a beautiful day. Happy trading this week. This is Risers X, where we rise to the occasion with your boy Montego Ramon. Peace.